Well, we hear predictions about 2017 and we hear more predictions. And then we thought it's best to get in the master technician himself to talk about what the charts are predicting for all of the key elements, be it the index, be it factors impacting the index, and be it sectors and spaces within the index that could do well or otherwise. Dr. C.K. Narayan in the 18 Hour Studios to talk about how 2017 could be like. Great having you, Doc. Thanks so much for joining in.
Thanks for having me here.
What's the basic synopsis? Let's get in the first chart, and I would urge you to start with the index. What do you think is the outlook 2017?
Well, outlook for 2017 is going to be largely governed by the, let's say, less than spectacular returns that we have had over the last 2 years. Now, that could be a little bit of positive because having finishing 2016 at the lower end, even a small pullback could give us positive returns across 2017.
Okay.
But if we go into the charts, what we can see here is I have overlaid the chart with some more, annotated the charts with some lines,
Okay.
what's known as a pitchfork indicator. And we can see that these have given very good supports to big declines in the indices.
Okay.
Now, whether it was 2013 or it was 2016.
This is 2013.
Yeah.
Okay.
So, this is 2016 early part.
Okay.
Right? So, I am expecting that this particular pitchfork will hold into 2017.
Okay.
So, this pitchfork along with this moving average line is actually running along at about 7600 levels
Okay.
on the Nifty.
Okay.
So, I think that should be about the worst case scenario for 2017.
And what's the best case then? I mean,
The best case then would go till this middle line.
Okay.
Now, this middle line is somewhere around close to 9800 or even slightly above, maybe 10,000. But that would be a very, very optimistic scenario.
Okay.
And we are currently not looking at that because there are too many domestic as well as global headwinds which are going on. So, I think right now we should confine ourselves to looking at what is the worst case scenario, because the best happens and we are all happy for it.
Right.
But the worst is what we have to deal with. So,
Okay.
that is at 7600 is what I am pegging it at.
Okay, so 7600 is the worst case scenario for the index. Let's get in the next chart going, and that's about what impacts the markets in a big way. The worst case scenario we have established 7600. Now, what will move the markets? And CK, you have an interesting analogy out here that it's the FI activity that probably has a bigger impact than the DI activity.
Yep.
Can you explain why are these charts?
See, these charts are actually the cumulative FI and the cumulative DI across a long period of time. Now, what is very distinct on this one is that the markets seem to respond a lot more whenever FIs are on a sell mode. The yellow line, as you can see, is the FIs on a sell-off mode across 2015,
Okay.
right into about 2016.
So
Now,
it has capped the upside.
yeah, it's capped the upside, plus it influences the trend of the market
Right.
to downside. You can see that actually the buying in the DI started from somewhere around 2014.
Okay.
And it has been a pretty aggressive buying. But when both FIs and DIs were on the buy side, the market had a nice upswing.
Okay.
But as soon as the FIs started to sell,
Okay,
even
okay,
though the DIs were still in a buy mode, the market still went down. Now, the more pertinent thing here is at the current juncture, in 2016, post this high that we recorded towards
Right.
the later part of 2016,
Right.
the FIs are now again on a sell mode.
Okay.
Even though the DIs are on a buy mode and their quantum is matching up,
Right.
we are still having the influence of the FIs and sending the market down.
Got it.
So, that is one of the biggest things we have to watch for, because the market responds more to the FI action than to the DI action, at least so far.
Okay, so it's the DI activity, the FI activity which is actually influencing the markets a lot more than the DI activity, more responsive as we stated. Let's get the next chart in, and that is factors which would influence global markets and Indian markets as well. So dollar index, new highs likely, CK, can you explain it via the charts? What are you trying
The
to say?
reason for picking the dollar index is that we were talking about this FI activity, right?
Right.
And the FI activity is going to be considerably influenced by how the dollar itself moves.
Right.
And what we have seen of late, particularly across 2016 and all, is a great surge in the value of the dollar as against most of the currency, entire global pack. And we, as we can see on the dollar index chart, the DXY has actually moved into a point of resistance. Now, this high is actually at about 103 levels. It is actually at a significant point where there could be a breakout. And if you have a breakout from here, then you are talking about further strengthening of the dollar. Now, the dollar strengthens even further it would stand to reason that the rupee would weaken as well most of the emerging market currencies.
Right.
So I think that would have a significant impact on how FI flows go. And if FI flows are going to be hampered in any manner, I think that will be a big question mark for new highs for our index to be achieved.
So we are at what levels right now, CK?
This is about 102, 103.
We are at 102, 103 right now.
Yeah, right now.
And there is a chance that we may actually
If
go up
we
further.
actually go up, then we may actually go up to about 110.
Okay.
And that would be a little worrisome for most of the global economy.
Okay.
It would actually create quite a tumult in the global markets.
Okay.
Itself, because 110 has not been seen for I think almost a decade.
Wow. So this is one of the key monitorables.
Yes, it's a key element
right.
for the whole globe actually.
Right. And the other key monitorable would be crude.
Absolutely.
Though, am I wrong in saying that a large part of the move is already behind us in the last couple of months? Can you explain it via your charts?
This is a chart of the crude, the long-term chart of crude. We had the high being made in 2006-07.
Which was this one.
Yeah, which was that one. And
Right.
then there has been a big drop which came in all the way till January of 2016 when we
Right.
hit something like $26 for a barrel.
Right.
Now this is a sustained bearish trend which seems to have ended, and therefore at $26 I think crude has put in a very significant bottom,
Right.
which is unlikely to be tested or lost in the near future. So crude is actually going on to a nice upward trend, and what is it's not visible on this particular chart, but crude has actually formed nice geometrical patterns like we call them within technical setup. So we expect that something similar would actually kind of persist, and that would mean that crude at the bare minimum in 2017 we are looking at about $60-61.
What does this channel indicate though? I mean,
This
you're
is
showing levels of 1 or 5,
this is the
150.
geometric channel of a likely pathway for crude. If the things kind of pan out well, meaning it is sort of bullish for crude, then it should follow this as a pathway. If it is less bullish, then it will probably come down and follow this as a pathway. Now if it follows this as a pathway, then you will not see a level below something like $43, $44. But if it were to turn weaker for whatever reason, then you would probably come down to test this lower channel, wherein the worst case scenario for crude should be somewhere around $37, $38.
Okay.
So you are looking at $61 as a most likely minimum target.
Got it.
For crude in 2017, and on the lower end I don't expect crude will really break about $38 during the next year. So we are looking at higher crude prices on an average across the next year. That will have an impact for the globe as well as for India.
It's not great musings for India then.
Absolutely.
Dollar index strength, crude strength. So what within the indices could do well? We try to look at outperformers, or what will make money. What do you think will make money?
I think, see, there are so many now global headwinds, and now we have domestic headwinds in terms of this demonetization. We need to see how it plays out, and I think that's going to take a little while. So whatever returns we are going to have for 2017 are definitely going to be back-ended. So the first half may be spent churning around and rebuilding or kind of assimilating whatever various outputs in
Right.
data come out.
Right.
And it will be only the second half which will see it. So I think within that, we have to look at sectors which have had a very good trend across the last year or more. And in that, one of the areas which I think had a very great year has been specialty chemicals.
Right.
Now, specialty chemicals is a very widespread set of stocks,
Of course.
where the ownership has been quite limited to the large names, a few, let's say the Pidilites of the world or a few of them like that. But a very large number of them are in the mid-cap, small-cap space.
Yes.
And you would find that
The
their market
SRFs,
cap,
Navin Fluorines, etc.
Even those are about, let's say, more than 1,000, 2,000
So Deepak
crore market cap.
Nitrites and the others.
Yeah, the Deepak Nitrites and the things like that will have a market cap of around 500 crores
Right.
or thereabouts. So
Right.
there are a hell of a lot of companies there. I think they have had a great run in 2016. 2017 first half, they will consolidate. I think 2 quarters of results will come out in these companies, and then the wheat will get separated from the chaff.
Okay.
And then because of the lack of ownership and the consistency in performance and the visibility in terms of
Sure.
earnings across the next 4 to 8 quarters
Right.
will, I think, make specialty chemicals a continued
sector to watch.
for the next year also.
Okay, let's just wrap it. Then which stock within this space are you looking for?
I would think that the stocks in this are yet to be discovered. We have,
okay.
we have already seen a big run, right?
Right.
You know, you have seen a big run in Aarti Industries, for example. I
Sure.
think Aarti will still do very well. Deepak Nitrite is something which you mentioned. Sudarshan Chemical has had a great
Right.
run. Now, all of these will consolidate, and I think winners of 2016 are still going to repeat.
Right.
But not in the glorious fashion that they did last year, but newer winners will also come up, where the good results plus the visibility in terms of earnings, I think we'll have to wait for 6 months to find out the new winners in specialty chemical.
Right.
But that as a sector is really going to continue to remain a winner across 2017.
Great. CK, thanks so much for sharing your expertise with us as well and for our viewers as well.
Thank you for having me here.
Yep.
Yes, wishing everybody a happy 2017.
Oh yes, indeed. Hopefully it is as good. And yeah, if you wanted to know what the charts are predicting for 2017 across segments, I think you just saw all that mattered. Thanks so much for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.